All right, all right. It's not recorded. It's not being recorded. All right. Let me start again. Now, okay. There's a rules that involve when you want to draw a trend line. The rule says whenever you want to draw a trend line, there must be at least two lows or at least two highs. All right. So which means if you want to draw a support trend line, there must be at least two lows. Because remember, a support is when the market is coming down and make a reversal. So that place is called a what? A support. So which means for you to draw a support trend line, that will be at least what? Two lows. And for you to draw a resistance trend line, that will be at least what? Two highs. Now, like I previously said, those points where the market reverse when it was coming down are also called your what? Your lows. Okay. Let me give you examples. This is a low. 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 While the ones on the top are highs. All right. So, but when you want to connect those lows and highs, you should connect the ones like. Hold on, let me clear this red dots. When you want to connect lows or highs, trying to create a support or a resistance, all right, you should also have pattern structures in mind, because it's when you connect lows and highs that's where you'll be able to identify what patterns. Definitely after this trend line, we're going to treat one or two patterns before we end the class tonight. So, but like I have pointed out, this point is a low, this point is a low, this is a low, this is a low. But let's say the market was coming down from here, all right, and it makes the first low. It made the first low, which we just point our trend line. Then this second low now formed. All right. So we are expecting this trend line to serve as a resistance when we extend that line, meaning that we are expecting that whenever the market touch that trend line, just as it has done in the previous lows, whenever it touch that trend line, we expect the market to bounce back. All right. So we're just gonna extend the trend line and see what really happened later. And also remember the rules that we say is whenever a support is broken, that support is now what? A resistance. And whenever a resistance is broken, that resistance is expected to serve as what? A support. So let's try and extend this. Now, after we extend this, the market from here bounce up, come back, and at this particular point, it didn't serve as what? A support. Based on if I should complete this structure, there's a pattern that is called a bear flag, and that's what actually formed here. So that was why it broke that one support, and that breakout confirmed that pattern structure. All right. So now after the breakout, that means a new resistance has been what formed, meaning we expect the market whenever it touches that trend line, that market is expected to what fall back. That is why that means what it has served as what a resistance. So after all and all happening in the market pushed up and immediately it struck the trend line. What do you see what happened? The trend line was resist that market. So with trend lines, you can be able to identify future possible market reversal. Now, it doesn't mean that whenever the market touches that trend line, you have to short that market. There are more things you need to confirm. You might need what we call the candle confirmation. Just like you can see what happened after you touch and the candle closed. The next candle that closed was red candle, bearish candle. The other one was also what? Bearish candle, showing that the market is insisting that it's going to what? Fall. Showing that the trend line has served what? Major what? Purpose. So it's a very simple rule. It's simple, and these are rules that you must have it offhand. Like it's something that must run in your brain. So that whenever you are trying to make analysis, you already know those rules. So when you are trying to draw, everything will just be like very, very clear in your eye. But if you don't know those rules, you will start making some dirty drawings. You won't be able to draw a very good trend line. that will serve its purpose. So that's number one example. Now let's try lows. You understand? Let's just try lows. Okay. Now I said something like this is a low. Something like this is a low. Something. Sorry, guys. Let's try what highs. We just try the lows, so we're going to try highs. So something like this is a high. 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 Even something like this is what? A high. Now, let's say when the market was when the market created this first high here, all right, we now draw our trend line. Let me bring a trend line. I bought a trend line there. All right. Then after that, the market created another what? High here. So what will I do? I will extend my what? My trend line there. I will extend it. All right. So what do you see happen? I was expecting that when the market, after the market has fallen from here, when the market has fallen from here, I was expecting that when the market gets to that point, is to resist it. Do you understand? It will resist it, but unfortunately, it got broken. Now, as the rules have already said, when the resistance is broken, a new support is what? Formed. What do you see that happen? After the breakout of that resistance, a retest came and it served what? As a support. It right, and came again to touch that trend line. What he did? It also served what? As a support. Which also was even pushes more further and further. So when you study your price action patterns, this is actually a pattern that signifies what? A bullish what? Buy. But we will get there one after the other. So for now, we are just talking about what? Trend line. So let me also show you another example of trend line. Let's say my first high, I connected it here. All right. And my second high, I connected it here. All right. So let's say let me see if I can find a example. Let me see if I can find a example. All right. Let me just find another example. The correct example. All right. Let me use this. I think this is more clear. Now look at this. This is a low. All right. Here is also what? A low. Let me use a red. This is a low. All right. Here is also what? A low. So let's say these two lows has formed. And I connected with one by trend line, and I extended it to be able to see a what? A future what? Reversal price level. Now you can see after the market gets to this level and touch that trend line, what happened? It's bounced back. It's bounced back. It's bounced back. Like you keep bouncing, even when you try to come close, you keep what? Going up. So that is simply how you use what? You use trend line and also apply it in order to identify a very possible what? Reversal place. So you don't just use trend line to select your buy and sell, or just support and resistance to select your buy and sell. All right. So you need to combine both trend lines, both resistance, and other factors. Like the factors we're going to move into: price patterns, price action patterns, and even indicators and even candlesticks. So whenever you combine all this knowledge of a technical analysis, and each of these factors are giving you the same direction, what does that mean? You have a very good possible chance of what? Winning that trade. Now know it, there is no strategy. Don't allow anybody to deceive you. All right, there is no strategy that can avoid you from incurring loss on your trade. But there are strategies that will make you what? Have more ways than what? Than loss. Do you understand that? For example, let's say if you are trading by yourself and you have 8 ways and 2 loss, definitely you end up what? In profit. That's what is what? Possible. But there's nothing possible like for you to always what? Have all your ways. Do you understand that? So meaning that there's nothing that you will learn now that will make you, always have 100% weight. But with all this knowledge, it will help you have what? A higher good winning rate than what? Others. And it's not just by learning it, it's also what? By applying it. And you must understand that trading is also more of what? Psychological. It's more of what? Your perception to the market. What do you think of that market? Is what you think that will also give you what? An eye opening to what your technical analysis will also what? Feed you back. Your technical analysis might feed you back, but what you are taking is what? Sell. And you might end up, instead of using the right buy, you went and what? Sell that market. Because within your mind, you don't accept to buy that market. Because that's your what? Your perception. All right. So let me also look for another example of using trend lines. Okay, I think I found the example. All right, what do you see happening here? The first low formed, the second low kind of formed, and are continued by trend lines. All right. And when the market touches that trend line, what do you see? It bounces back. Even at this point, it touches it again. What? It bounces back before it got what? Broken. All right. And if you should study about price patterns, this structure is actually what? A price pattern. Let me just kind of complete it. This is actually a price pattern. And if you kind of scroll through this book, you'll see a structure like this. Meaning that once this trend line got broken, it has become a sell market. It has become a bear market. That's what this pattern. After it got broken, it keeps selling to another patterns are formed. So this kind of pattern is kind of a reversal pattern, but you still get to that stage. But at least you can understand what I'm trying to explain concerning what? Trend lines. All right. Now, what we are going to jump into now is on our price pattern. But before then, I would like to entertain some questions on using trend lines. Anybody with a question? Anybody with a question? All right. Seems no question. Cool. Let's open our book, and I promise if you guys should be going through the book sent, you will find it more easier to comprehend than when you didn't go through it.
All right. We call it what? Chart patterns. Okay. So here are the list of chart patterns that we're going to go through. We're going to go through the triangle patterns, the flag patterns, the cup and handle patterns, the wedge patterns, pull back patterns, double bottom and double top patterns, triple bottom and triple top patterns, head and shoulder patterns, inverted head and shoulder patterns, pennant pattern, and channel what patterns. Now let's start with triangle patterns. We can try to treat at least one or two triangle patterns before our times run out. Triangles are believed to be the most essential and frequently emerged chart patterns in termed as the holy grail of day trading because of their reliability and effectiveness. So what they're kind of trying to say is, it's one of the most formed chart patterns. Like when you want to look for patterns on the chart, you mostly see triangle patterns. So they are kind of the holy grail of what day trading. So people that always want to trade and are looking for something to confirm their entry, definitely what they mostly see is what triangle patterns. But that doesn't mean that it's only triangle patterns that we have. We still have a lot of patterns that are even more stronger. So let's start with symmetrical triangle. We have three types of major three type of what triangle pattern, which is a symmetrical triangle. Inside symmetrical triangle, we have the bullish and bearish symmetrical triangle. So until we get there. So we have symmetrical triangle, ascending triangle, and descending what triangle. So let's start with symmetrical triangle first. The symmetrical triangle breakout pattern is identified by the thin shape created by two converging trend lines, symmetrical in nature. The pattern is formed by two trend lines that connect a series of sequentially higher swing pivot lows. They're talking about lows, and a series of lower swing pivot highs. They're talking about highs. Price action is largely contained within the triangle formation, and traders typically look for buying opportunities once this price breakouts above the upper trend line. So which means a symmetrical bullish triangle is formed whenever you connect a trend line, your support trend line and your resistance trend line, and they are converging to each other, which means your support is upward sloping, while your resistance is the downward sloping. So they are converging to a particular point. You understand? So when you connect the trend line of two lows and two highs, and that structure looks like that, that means what? A bullish symmetrical triangle is what forming, and you just sit tightly and wait for what a breakout. But before then, I'll also show you what they are trying to say in a structure form. What they are trying to say is this: that a bullish symmetrical triangle is one your trend line. After drawing your, let's say you draw your resistance trend line and it look like this, and you also draw your support trend line and it look like this. You see that they are converging to a particular point, while the support is upward sloping and the resistance is downward sloping. This is the best way to identify a symmetrical triangle. Now, another way to identify a symmetrical triangle is after drawing this, the market should definitely be an uptrend. So meaning that a symmetrical triangle, a bullish symmetrical triangle is actually a continuation pattern. A bullish continuation pattern. Meaning what? Let me also get my meaning what? That the market should be like this. Let's say the market was coming up, riding up, hit at this point, then it started consolidating, and on that consolidating is formed the first low. Remember, it has already formed the first high. It bounced again, and at this particular point, it's formed the second high. This is where you first draw your trend line, because you connected two highs. Now at this point again, it switched here and bounced back.
This is now where you connect to what? Your trend line for what? The lows. Now, when you connect these two trend line, you see that they are converging at each other. Now, what do you expect? You expect that whenever the market touch this trend line, it should bounce back to each other until it break out. And that place that it break out is what the trend is what is. So meaning that based on the structure, you're expecting it to what? Break this particular line. All right. But on some on some certain times, it might reach touch the trend line again and bounce back. All right. Touch this one again and also what? Bounce back. So this might be the time it will break, and you expect it to what? Break, retest, and what? A flag. This is what? How what? A bullish symmetrical triangle looks and expected to what? Play out. So now you might ask yourself, how do you even make entry before you break out? Now, when you have seen the two lows and two highs, and you see that what is actually forming is what? A symmetrical triangle. There are two ways you can make your entry. You can make your entry when, hold on, when it touch this support the third time. All right. Or after you break out and this what? Retest. These two ways you can what? Make your entry. Now, knowing that there are most times that there will be a breakout, but because of the force, there will be no retest, and the market will just what? Continue going on. Because that breakout means the market has become bullish. It's a continuation pattern. So breaking out is a what? A confirmation. So most times traders, in order to avoid possible drawdowns, they tend to wait for what? The retest, which is very, very advisable, because the breakout might be a forced breakout. So you need to wait for a retest and make sure that that trend line, that resistant trend line before, has what? Served as a support. That means retest what? Confirmation. This is now when you can what? Start what? Buying. Do you guys understood? Do you guys understood? Or understand? You know.
That person can't wake up in my 25.
Sorry guys, I mistakenly minimized and cleared my app, please. Please don't be offended, please. I got logged out, and for me to come in, I'm no more the host. I'm trying to reach Mr. Ralph to get me back at those. But if you have question regarding what we just talked, please ask your question. Except you don't have a question, then we might continue. All right, I'm back. So do you have any question regarding our symmetrical triangle, bullish symmetrical triangle? Do you have any question? Okay, since there is no question, let's continue. Okay, they say let's put a definition. Put another way, when price action forms a series of lower string pivot ties, which is highs, and higher string / pivot lows, which is our lows, a symmetrical triangle is created. Symmetrical triangle can break out in either direction since this consolidation pattern has equal sentiment driving the information. Okay. Within an uptrend, the possibility of the breakout to the upside can increase due to overall momentum. Now, what I'm trying to explain to you here now is what symmetrical triangle. Now, how do you now say it? For you to be able to know that the possibility of breaking at the upside is high, is what? They say possibility of breakout to the upside can increase due to overall momentum of bullish sentiment, supported by the potentially significant amount of underlying support in the chart. So which means the overall market should be a bullish market, which is why I also identify it while discussing it. That for you to call it a bullish symmetrical triangle, the overall market should be a bullish market. Means the market was coming up before that pattern was formed. So when you identify a symmetrical triangle, when the market was bullish, means that the possibility of it breaking the resistance is higher. But when it's coming down before the formation, the possibility of it breaking the support is higher, which is what we call a bearish symmetrical triangle. Let's look at the example they give us here. Now you can see the example they give us here. With this line here. All right. All right. Let's just look at the example they give us here. Look at this. Symmetrical triangle was bullish. Now, remember what I said. When this is formed, something like this is formed, is a symmetrical triangle. But how do you know it's a bullish symmetrical triangle? It means that the market was due an uptrend before it started to form. If you look at from here, you can see that the market was coming up before it reached the first high. Trying to tell you that the market was actually an uptrend before starting to form that symmetrical triangle. So when a structure like this is formed, the possibility of it to break the resistance is higher than when the market is a bearish market. So in all, you can just say that a symmetrical triangle is a continuation pattern. So when the market is bullish and the market just gets into a consolidation, you can use a symmetrical triangle to identify That's what a continuation is about to what begin. I hope that is clear. Now let's look at a real life example before we go and look for a real life example in our chart. If we look at this real life example, what you see, the market was what actually was on an uptrend before it hits this each word first low. The bounce up, hit it what first was high, came back again, hit it was second low. This is now when this person draw was the trend line. Expecting that whenever the market comes to this trend line, it will what bounce back. And expecting it to what possibly what break this resistance. So, like I said, you can make your entry at the text touch. That is the third what support touch, or after a breakout and what retest. Is that clear? Any question? Any question? Please, no question. All right. Let's try to go into our chart and try to see if we can identify a symmetrical bullish what triangle on any chart, so we can experience a real life example of how it should be like. To get that, I need to switch to the 1 hour time frame so I can be able to spot opportunities. The market has been a bearish market, so it will be hard to see a bullish symmetrical triangle because the market has been what a bearish market. But we just need to go into a smaller time frame and see if we can identify one. So let us know no one found here yet. MG, GMC, LDT. Let's see if anyone found. This can be a perfect example. Let me select for 2 hours. See if I can. All right. Something here now is kind of an example of what is symmetrical triangle. What do you notice here? This was my what? My first low. After the market has right up. Let me add my so. After the market has right up, it came here and create what? My first low. It came here, create the first high, create the second high, and also what? Create the second what? Low. This is now when you what? You connect your trend lines. Now, after everything that happened here, what do you see after a breakout? After a breakout, a push what started, showing that what the uptrend that was on this coin before as what continued. Now, what did I say before? I said that you can make your entry at a touch of what? The check touch on your what? Your support, which could be here. Let me kind of zoom it. Which is what? Here. Or it can also be what? Here. This is that. What do you see? After it has been consolidating within this triangle, the triangle started what? Compounding the price, making the price ranges to be what? Smaller and tight. And you know, when you try to compress something, let's say you want to compress gas, and the gas cylinder can't hold that gas anymore, and you keep compressing it, what will happen? It will explode. So that's kind of something that is happening on this market. So this triangle is kind of gas cylinder, and this price is kind of what? Gas. So as the price keep ranging and it keep getting tighter and couldn't hold that price within that cylinder anymore, what did it do? What? It explode. It break out what? And explode. And you can see how far it keeps riding to a new pattern again is what? Form. Even at this point, I can still see I can even see another symmetrical triangle, really symmetrical triangle again here. And this is kind of a very perfect one. A very perfect one. What is happening here? This was here. This particular place was what? The first what? Was the first what? Low. Why here was the first and second what? High. You can see as it keep touching it, it keep compounding until when this triangle could not hold this position or could not hold this price, which is kind of I replace as a gas in a gas cylinder. What happened? It explode, it break out. And after it break out, you can see a retest that formed, which I also told you guys that this is the second way you can what? Make your entry. If a retest should occur and it actually serve as what? A support. What do you expect? You expect what? A buy. And you can see as the market what? Right itself. So by short there, you must have what? Taking your take profit. So what again I'm going to discuss again before we end this class is how can you be able to determine your what? Your take profit. There are two ways I use to determine my take profit. First is a support or a resistance. What did I say? A support or a resistance. So if I should try to determine the take profit here, I should be looking at what? A resistance. Any resistance zone in the past can be what? My take profit what? Level. For example, let me give you an example. You know, this is a resistance here. So I can say that, okay, since there is a resistance, there is a possibility that when the market gets to that particular price, it will resist it. So therefore, I would take it as what? My take profit. Meaning, let me also draw a trend line. Meaning that I'll just have to draw a trend line from that resistance and extend it. So what does it mean? This mean now? It means that at this particular price level, I have taken my profits and leave that market. You see that? So whatever happens else, it doesn't what concerns me. Do you see that? Another way I also determine my take profit is by measuring the length between the first low and the first high. I move it towards from the breaking out point to determine what my TP. What do I mean by that? I have to measure between the first low and the first line, which means I'll mark a line from there to here, from here to here, and I'll move that line, like I'll clone the line. I'll move it from this entry and see where it's reached. Let's see whether this market reached that point before it's reversed. Let me draw it. I'll draw it from this first low, and I'll draw it to here. So what will I do? I will clone it. And once I clone it, so this is a mistake. Well, I don't need to clone it. Let me just drag this one. Let me drag that one here. I'll drag it to this breakout. And what exactly do you see happen here? You can see that even like the market touch at the end, which is here, the market start to reverse. So if you're able to use this way to determine your TP, you'll be able to hit your TP before that market change that direction. I hope you guys are really jotting things down, because you might not be able to have this without having to look into it several times and master it. So because I used to see some people that used to trade, yeah, they used to have good interest, but because of greed, they want to hold for long, make good profits, and they don't even know when to like leave the market, buy back, and stuff like that. But with this strategy, I'm just showing you guys these two ways of taking my TP. I'll be able to close my position in profit before the reversal. Now you can see what happened here. This reversal even came back to my entry. Making that if you are still holding this market, you might end up not even seeing profit at the end, or even the market eating your stop loss. So this is the very simplest way to set your TP or your bullish symmetrical triangle. Exactly. All right. So this is where we are going to end the class for today, and by tomorrow we will discuss on bearish symmetrical triangle. Bearish symmetrical triangle. If you have any question, please ask your question. Miss Precious, we have limited time, but I believe that when you rewatch the video, there is a recorded video available. When you watch the video, you'll be able to understand better, except you have a very specific question. All right. All right, guys. This is where we will draw the line for the class today.
Really appreciate you. Thank you for the class. Everyone, thank you for attending, and get ready for tomorrow. Tomorrow is going to be more greater than tonight. As you prepare your mind, go back to what you've been taught, practice them, then you can bring your question to any of the leaders. Thank you and have a wonderful night.
Gosh.